Okay, recording this video on Sunday, the 27th of September 2020. It's just coming up to 7:22 p.m. Chicago time. Do hope you're doing well. Hope you're enjoying your weekend. So this video is going to be on the British pound, and this is kind of a bit of an odd video to put up right now. I don't think there's anything particularly that the Brits are doing that would cause a rally in the British pound. Lately, the moves in the British pound have been driven by Brexit news, as the negotiations, or whatever you call them right now, the deal finalization kind of process moves forward. Any little kind of change in the wind there seems to be pushing the British pound around. But you got to think, we're end of September now. That whole deal's got to be done by the end of the year. At some point, some clarity's got to come due, and people have got to decide, are we going to be investing in the British economy or not? Or maybe it's pandemic related kind of going forward. Maybe something next week's going to happen. Boris Johnson's going to say, actually, it's all over in terms of, pandemic. We'll follow Florida, whatever, and kind of open up and get this thing kind of back on track. So I don't know what fundamentally is going to change in the British pound, but I see something happening on my British pound charts that I'm certainly looking at Monday, Tuesday for maybe a little bit of a kind of a setup. So anyway, let's see. We'll kind of wait and see what happens Monday, Tuesday. There are some levels to look at the British pound, but there's a potential setup kind of happening. I just want to show you those on my charts. I'm going to do it from the weekly down to the daily and to, I think it's the tick bar chart, which is a 5,000 tick bar chart of the British pound. So usual setup on the two charts, exactly the same settings. All the default settings of the better indicators are the same for all time frames. There's nothing kind of time frame specific or instrument specific in the better indicators to be able to optimize them for a particular market or time frame. No, they're all they work with exactly the same default settings in all time frames and all markets. So just to make that clear. And we've got the usual setup with the right hand side. We've got everything to do with the price, and on the left hand side everything to do with volume. And this is at BP, which is continuous contract to the British pound versus the US dollar. And I'll show you the weekly chart first, then the daily, then the tip bar chart. And on the right hand side with better sine wave, we've got all our cycles being calculated in 3 different time frames: low, medium, high. And those are the lines here. The thinnest lines are the lowest time frames. The thickest lines are the highest time frames, and that allows us to plot the cyclical support and resistance patterns on the price bars themselves, and then breaks of those support and resistance gives us trends. Uptrends are painted in red, and we're breaking through resistances on uptrends. Downtrends, we're breaking through supports, and those are printed in white. Left hand side, everything to do with volumes. So we've got better momentum below the price bars here, which is a volume-based momentum indicator. We get exhaustion patterns, bullish divergence patterns, flush patterns here, and the reverse on the upside here, and those are plotted on the price bars themselves. And then better pro-am gives us amateur and professional activity. Professionals are painted in blue, amateurs are painted in yellow. And then when the two time frames, when the two types of indicators, price-based and volume-based, are both moving together, we get confirmed uptrends, and I call those combo trends, when we get a combination of price trends and volume trends kind of moving together. Downtrends are in grey background, and uptrends in this kind of red background. So there you go. That's my little spiel on the better indicators and how you look at them. So British pound, it's kind of been interesting over the years. Topped out in 07, 08, kind of up here. Did pretty poorly during the financial crisis, 08 to 09. We kind of fussed around a little bit. The next big thing that happened to the British pound was Brexit, and that was June 23rd or something back in 2016, and that's where the news that the Brexit vote kind of came out and the pound kind of sunk off. We retraced back into that kind of breakdown level a couple of years later, and then we broken down from there. And the activity in the last, since the beginning of the year has been pretty chaotic. So this was when we had the crash of the equities markets, and everybody kind of rolled into safer margin call type currencies and kind of safer currencies. Japanese yen, the euro to some extent because it was kind of margin call based. Japanese yen, US dollar, and out of the British pound, which is viewed today as some kind of periphery type of currency. It's not an emerging market currency. I don't know why we call Australian dollar and Canadian dollar emerging markets. They're hardly emerging markets as you'd think something like the Thai baht or Indonesian rupiah would be kind of more emerging markets. But anyway, it's a peripheral kind of currency. It's not a core kind of currency as the Japanese yen, the euro, and the US dollar would be. But it fared pretty poorly, the beginning of February when we kind of fell down here on this weekly chart. And you can see we went down to, I don't even know what the lows were down there, 114.50 against the US dollar. So, almost parity. But so what's happening at the moment? So at the moment, we've got this we've been weak. You can see all of the bars on beta sine wave are white, showing we're in a downtrend. But the last two times we've kind of tested into these lows, back down towards the 120 level, being led by the amateurs. So we got rainbow patterns here and these kind of series of amateur down bars. So the amateurs are trying to, sell this thing down at these lows. It is weak at the moment, no doubt about it, but what we'd need to break into an uptrend would be a break back up above the 133, 134 level here. So you can see on the weekly chart, we got that whole area as resistance there. If for some reason we get some strength starting this week and we kind of rally back into the 30s, 33, 34, watch out, because that'd be really interesting as a break back above those resistances on the weekly chart. So let me just make a note of that. So that's 134, let's say, on the weekly chart as an area of resistance. If we get above that, it's like, look out, we could be going for a little bit of a run. So now let's change this to a daily chart and see what's going on the daily chart here. Bang, bang, recalculates super fast, which is nice. So there we go. That's the, February, March kind of sell-off in the British pound. And, we went pretty high into 134s up here, and then in the last couple of weeks we've had this kind of bad news out of the UK, or it's been interpreted as bad news out of the UK in terms of the no-deal Brexit and the negotiations with the Europeans. So we've sold off from there, but we are in an uptrend in terms of better pro-am. Those are those amateur down bars kind of here, getting wrong-footed, and we rallied from there, and we've come back down into this zone. We've kind of maxed out a little bit in terms of exhaustion volume, and bearish divergence patterns kind of come in here, and we found resistance on the highest time frame here at that 134, 135 kind of level up here, and we've broken back down. So we've got a little bit of weakness at the moment with white bars on the daily chart, but it's after a pretty strong little rally. One of the patterns I particularly like is when we're caught by the next highest time frame. So what I mean by that is we get a break of, in this case, support in the daily time frame, and support comes in on the next highest time frame here, the next widest bars here that come in to support that little area breakdown. So we have some weakness, but it doesn't travel. It breaks below a support level, but it doesn't break into a downtrend. It gets caught by the next highest time frame, and we rally from there. Those little sell-offs that get caught and then we rally from there are really nice. They're really good trades. When I've done any testing of beta sine wave, it's one of the most consistent patterns, being caught in the next highest time frame. Either way, kind of short or long, and so it's areas where we get sold off to some extent and then rally from there, and you get really nice little trades. And that would trade if we get that support coming in on that highest time frame, next highest time frame, this intermediate time frame. That would trade from support to resistance. So it would be a nice trade if it happens. So we've got that on the daily chart where we've got some weakness at the moment. But, we had this nice little rally from kind of March, April onwards that we've kind of settled down into. So it's something that is interesting from me, and this kind of level, if we got caught by this intermediate time frame, it would be a really good little trade on the daily chart. So it's worth looking for to see if this turns into a nasty kind of downtrend, or it's an area where we get support and we get a little bit of rally. How can we time it a little bit more precisely and see some other activity? We go down another time frame. So we've gone down from the weekly to the daily time frame, and we're going down into the tick bar charts, and a 5,000 tick bar chart on at BP, which is the CME traded Globex traded futures contract of the pound versus the dollar. A 5,000 tick bar chart gives us roughly 9 bars a day, which is kind of going down a time frame, which is nice, so we can get a little bit of granularity or see what's going on. So this little sell-off from 134.39 on the tick bar chart there, that was that high up there that we sold off really hard. And you could see the rally was being led by the amateurs with Rambo patterns kind of going up. And then all of a sudden, this was really nasty activity. There was nothing holding us. This thing just let loose on very low volume bars. And it was all Rambo patterns on the other side. So that was all amateurs kind of getting out of their short positions. Getting out of their long positions, traded out of their long positions and kind of going short. So that was pretty exciting, and that was all driven by kind of no deal Brexit news. But what's happened since? We've kind of come back down, and we've had a little bit of activity from the professionals. So we got 2-3 bars, professional bars kind of come in here, trading into those lows at 28. Now, if we get above the highs of those, they were picking it up during that activity. So getting above 128.72 to 129, a break back above there would be really nice. That would show that they were picking up that little activity there. Better momentum sometimes can be unreliable because of the data coming out of the CME. Sometimes I just find it a little bit kind of odd with the data that we see coming out with particularly Forex kind of CME contracts. But the data is the data, so kind of go with that. You can see during this whole sell-off down here, better momentum was very positive there, which means that the selling was being driven by low average trade size kind of amateur stuff, and it was actually being picked up by the professionals there. That's why this is all above the zero line. So just take it with a kind of grain of salt, whether it was real data there or the data's off a little bit. I don't know. I'm in two minds about that. You can see that the rally was really weak. It didn't end up with an exhaustion buy pattern or anything like that. But again, because that momentum pattern was so weak going up, you just can see that that was just driven by not a lot of fuel, low average trade size, amateurs kind of buying into that kind of blow-off move. So it was weak. So momentum is pretty strong at the moment. So that's kind of interesting, kind of down here. And then on the cycles side of things, we busted into this big uptrend above resistance here, bang, bang, bang. We made pullback to end of trend on the lowest time frame on the left shoulder. The head was a pullback to end of trend on the intermediate time frame. We fell off from there. And we've now come into cyclical support on the highest time frame. So that pullback support level there. Yep, we could overshoot it a little bit. That's kind of no problem there. That's okay. But it just means at that point we should be looking for long trades. There's some kind of cyclical support in there. We've also had pullback to end of trend on the lowest time frame go off, and we're 2 cycles after that. And I like these kind of 2 cyclical turns after an end of trend as an area where we find support. It's also coming up with support in the intermediate time frame. So these two are close together on the low and intermediate time frame. The support in the highest time frame a little bit further away, but we got a triple support. So that's interesting. We've also had the first little sign of strength breaking above a resistance level here, and a support level at this point on the lowest time frame is holding. So a break above this high, which is 28.11, 128.11, would trigger us into a confirmed uptrend. So on the tick bar chart, we've got some professionals kind of interested here. If this triggers above 128.11 on some strength here, and then gets us up above 28.72, that would give us confirmed uptrend in both price and volume going on here. And then that could mean in the next couple of days cyclical support coming in on this daily chart on the intermediate time frame where we've just sold off here, and it's an area where we would hold from. Now, that would be nice for a kind of trade. Remember at the highs here, this was driven by the amateurs. We didn't see blue professional bars kind of buying a sell-off, a blow-off type move. We didn't have exhaustion buy. This thing had exhaustion selling at this point and at this point from which we rallied, but we didn't have exhaustion buy. So that move was never fully finished off. If you like, we didn't see a whole bunch of blue professional bars coming into those highs. We didn't see an exhaustion buy pattern at this point. And we got forced kind of back down here to this level, and the professionals have kind of stepped back in. So potentially, if this holds, if we get above 28.11, if we get above 28.72, we could go above 35, kind of up here, which would be a really, really nice trade. So Monday, Tuesday's activity is going to be key on the British pound. Potentially, it could be driven by a little bit of news of announcement out of the UK. I don't know if anything's kind of scheduled on the COVID kind of pandemic kind of side of things, or the Brexit kind of side of things. Who knows? But it's something I'm looking at on my charts for Monday, Tuesday to kind of get involved in a long British pound trade. So there we go. A little bit unusual. Wasn't expecting to kind of talk about the British pound at this point in time. But let's see. Monday, Tuesday's activity is going to be pretty interesting to see if we get a little bit of a rally in the pound.